thanks for joining me on my market report. My name is Mike, and if you're new to my channel or my videos, well, we create these videos on a daily basis and go over what's impacting mortgage rates on those days. And sometimes it could be something from the economic calendar, could be something from headline news or geopolitical. Sometimes the data that comes out that's good news should be good news, but however, now becomes bad news, and the sentiment changes in the markets. And well, we're here to try to help you guys navigate through those waters and try to help figure out what's going on here and help you make an informed decision. So if you're looking to refinance or purchase, you know where rates are going, and hopefully these videos can help guide you. And if you're in the industry, well, hopefully this will be some good, interesting information for you as well. It'll let you know what's going on with the mortgage rates market here. A little bit about myself is I am a loan officer. I do work with a national lender, so we do loans in all 50 states. So if you guys need assistance with those refinance or purchases, we'd love to be able to help you with those. However, but we can also be here just as a resource. If you guys are looking for, have questions about mortgage rates or programs available or different things along the line, we can also help answer those questions for you as well. So please use us to the best of your abilities. We're here to help you guys out. And just leave a note or a message on the where you saw the video, and we'll be more than happy to answer out. Hopefully, if you got a question out there, more people might have the same type of question, and hopefully we can help those people out as well. Uh, Without further ado, why don't we jump right into the video? We'll start out with economic calendar. Today, we do, again, if you saw my video yesterday, we basically said this week would be pretty lightweight for the most part. There will be one real big data coming out, and that will be on Thursday. That will be the CPI report, which is inflation. Uh, but however, we do got started today some Treasury notes. Today we got the 3-year auction note. This won't have much of an impact on our market. We want usually between 5-7 year, all the way up to the 10 and 30 year, which will have more impact. But tomorrow we'll have the 10-year note on auction for tomorrow, so that could have a little bit more of a uh, impact later in the day once those auctions go through tomorrow. Now, again, so we're taking our direction mostly from the earnings reports that are being released. The investors are kind of preparing for a high CPI report. So if it comes in a little low, obviously that will help us out. If it comes in high, well, that's kind of be expected, and we could see probably worse pricing in terms of our mortgage rates. Also, that means that the Fed will be taking more action, most likely. That would probably increase their March Fed rate hike probably to from a quarter to a 0.5%, probably more likely. Not to say that that's what they'll do, but the chances of that happening will rise. So that's been kind of a concern. There's also been talk that the Fed would probably raise rates almost pretty much every single meeting. So, they mentioned 7, but I believe there's only 6 left. So probably maybe even all 6 meetings potentially they could raise rates. So stay tuned to that. Hopefully we'll get some guidance soon once the Fed speakers have a few more speaking engagements, and hopefully we'll talk a little bit more about that. But in the meantime, again, we're taking earnings from current earnings reports. They are watching treasuries as treasuries have been spiking. It looks like it could be approaching that 2% much quicker than we had anticipated as a result. So a lot of the ones that would be normally hurt would be your Nasdaq type of programs, stocks, as they use use these type of short-term debt to help for the growth, and with the rising of the yields, that would cut into their profit taking. But in any case, stocks are up today. However, as you can see here, mortgage-backed securities are in the opposite direction. We're down 20 basis points, so the gains we had yesterday got lost, and we're down 20 basis points, which would translate to worse pricing today. I wouldn't say there's a whole lot of volatility today. Just as you saw, it came up and just kind of dropped, and it kind of that pattern for most of the day here, for most of the morning here. We're up shortly, and then as you saw, it kind of dropped over, kept dropping, and then finally that's where we're at right now, down about 20 basis points. So I wouldn't say there's been a whole lot. It was pretty much a straight line shot down that way. Yields, I think, pretty much work the same way. We're touching up on this ceiling here, working on the ceiling, and just under 1.96 currently. And that 1.95 is an important level there, and that seems to be the level that could be crossing the threshold and push us into the 2% range again much sooner than we had anticipated. We'd hope that this would be pushed on later in the year, but however, it looks like we could get there much quicker than we had first anticipated. So lastly, we'll go over the average rate for conforming limits. They do have points built into it. The 30 years at 3.87 now, and the 15 years at 3.13 currently. Again, these do have points built into it. They're average for conforming limits. As you can see, they have been rising over the past several months, and probably even had the biggest spikes in January and even partially this month as well. But in any case, if you guys need a rate quote, please reach out. We can certainly work with you guys on that. If you guys like these videos, please help us out. We greatly appreciate it if you can help us out and share us and smash that like button and help us out. And if you guys got any questions, again, we're here to help. Thanks so much for watching. We look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.